This is the Rich Dad Radio Show. The good news and bad news about money. Here's Robert Kiyosaki.
Hello. Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And today we have a very important show for all you people you either hate Bitcoin or love Bitcoin or want to know more about crypto, or is it time for you to get in? But more importantly, what's happening in it? You know, what's going on? And, I barely use my cell phone, so I know nothing. So I don't expect anything from me. So I have a very, fantastic guest is Jeff Wang. He's been with us many times, and he's going to go into what's happening and what's going on inside this massive world of cryptocurrency. So welcome to the program, Jeff.
Hey there. How's it going?
Good. First of all, you're in San Francisco, and I was asking you about, I used to work on Market Street in the Embarcadero in the 60s, when I was working for Standard Oil. And I keep hearing now that there's people living on the streets and taking dumps on the streets and all that stuff. And you said that was still going on for a while?
Yeah, it's all over the place. Even in front of like Facebook's building, there's still homeless people. They're cleaning it up. They're doing a better job of like putting up fences and building shelters and migrating them. But again, it's still a problem in San Francisco.
It doesn't solve the problem. It just kind of moves them out of the neighborhood.
Yeah, pretty much.
Jeez. So it's kind of like Washington, D.C., but they put up fences and all that. So, Jeff, is that the future? We're going to put fences around everything?
I think the systemic issue is kind of income inequality. So basically, if the money keeps going to one side, you're going to have all these people left behind. And in San Francisco, it's very evident. You can see that happening here.
Right. But
that's not what the show is about.
Yeah. No, but it affects all of us because, I've never trusted the dollar. I started off as a silver guy, then gold, and now I have Bitcoin. But I just don't trust my government. I mean, that's what it comes down to.
Yeah.
And it doesn't make a difference if Trump was in or Biden was in. We're still getting screwed. And what's happening to, in my opinion, the income inequality is very simply that you have one thing going on is technology. Technology is wiping out jobs all over the place. And it's going to increase artificial intelligence and all that. Like, my friends who are accountants and lawyers and doctors, they say pretty soon we don't need as many of us because the blockchain can handle a lot of that. So this idea of job security for life and, you can stay with a company forever is kind of obsolete thinking. And then the second problem, so one is artificial, one is technology, but second is corruption of the U.S. dollar. And they just keep, instead of solving the problem, they just keep printing more of it. So the debt just keeps going up. But it makes it harder and harder for the guy literally in the street today to survive because they don't have the job skills, they don't have the skills and all this to earn the income that'll get them off the streets. And so it's more than systemic. This is global transformation right in front of us. So what do you think about that?
Yeah, I think especially with the stimulus plans, there's we didn't actually expect. From a valuation model, how do you value Bitcoin and other cryptocurrencies? We didn't expect the pandemic to create, even a third stimulus coming, right? So what's happening is there's so much money being printed that there's a lot of excess money as well. And that excess money does go back to the stock market. It does go back to other investments here. So what we're seeing now is like with low interest rates, you see like the stock market at all-time highs. You see cryptocurrencies at all-time highs. You see real estate like the fastest buying growth in 6 years, right? So what's happening with crypto is like there's nowhere else to invest money right now. But within subsets of crypto, there are ecosystems that are still, I wouldn't say undervalued. I'd say like superheated, but there's still yield coming from these ecosystems that are being built on cryptocurrencies right now. And that's what like kind of our research and our kind of predictions are heading towards in the cryptocurrency area.
Right. So the reason we would like to have you back is because all of Rich Dad Radio, because a lot of guys on our program are real estate guys or entrepreneurs and all this. But the question is, where do you put your money? I started off years ago saying cash is trash, and it's becoming trash. The more that artificial intelligence and technology makes things more efficient, prices should keep coming down, but the Fed keeps pumping it up. And so we have the guys in the middle, the people that, lesson number one in Rich Dad Poor Dad is rich don't work for money. Because the moment you do that, you're screwed. So it's coming true right now. It really deeply concerns me, especially now that I'm going, oh my God, what I was saying 25 years ago is coming true today. And so that's why people have got to understand what goes on in your head, because that's the future now. The future of money lies in my opinion, crypto or Bitcoin and blockchain. So what do you have to say about that?
Yeah, so we can talk for hours on this, so I'll try to summarize it as much as I can. Let's start with Bitcoin. Just a quick summary to first-time listeners. Bitcoin is a decentralized ledger. You can think of an Excel sheet that nobody actually owns, but everybody that has a cell, you can control the money coming out only, and you can receive money. What's also interesting about Bitcoin is it's very, not fixed supply, very, very deflationary though. As more Bitcoins are minted, it gets less and less inflation. And I think it stops around 21 million Bitcoin. And it's not pegged against anything, right? You can say Bitcoin today is $37,000, but it's not really, it doesn't matter. Bitcoin is itself. It's not pegged to any world currency. And as a result, if you have US dollar getting printed as crazy, Bitcoin actually is inversely correlated. So basically, as a dollar value goes down, Bitcoin actually goes up. And what we're seeing right now is hundreds of billions of dollars being acquired by financial institutions. Grayscale being a very prominent one. They own $20 billion of Bitcoin right now. A lot of other funds are buying in the $100 million increments. But what's happening is there's not much supply left of Bitcoin actually. And it's causing an overcorrection of the kind of hedge against the dollar thesis. I think everyone agrees that it is a hedge against the dollar, but at some point it might be overcorrecting it. And then as the vaccines roll out and the dollar gets stronger, that thesis is going to get turned around, right? So that's at least my view on Bitcoin. And again, if we have a third stimulus, we probably haven't even seen the top yet. Third stimulus would, again, further devalue the dollar and further give Bitcoin that hedge up. So even the $50,000 range that you predicted a while ago, which I thought was a little bit high, even the $50,000 range of Bitcoin is not out of the question at all right now. Yeah.
And the reason I'm not judging Bitcoin, I'm judging the stupidity of our government. And when I'm being a real estate guy, when I look at how much debt is going to default, and the question is, when all those office buildings around San Francisco can't pay the rent, who's going to bail them out? That's why I put my 50,000 bet. It was a bet against the economy. It wasn't a bet on Bitcoin. And I'm betting they're going to print. I mean, if they don't print, we're screwed anyway. So that's kind of my philosophy. It's not a very sophisticated philosophy, but I'd rather have Bitcoin than dollars right now. That's all I'm saying.
So I want to talk about what's going on with Ethereum, though, because I think this is pretty crazy. So just another summary for everyone else. Ethereum took that decentralized ledger idea. They added a programmable logic on top of that, so people can actually develop code on blockchain. So what you have is decentralized code as well as currency, and people use the first use case is always currency, because that's the most you can take financial applications and put value on it and then transfer it over the chain. But Ethereum in 2018 came up with the ICO concept. You can mint new tokens on top of Ethereum, and that became a huge fundraising vehicle in 2018, which ultimately resulted in a big bubble pop because there was not much utility. There was actually not much adoption coming from that. 2020 though has changed everything. By the way, just to give a reference, Ethereum is up 700% since last year, and Bitcoin is up 300% since last year. So that's just kind of reference of what's going on with the kind of divergence of Bitcoin and Ethereum. But by the way, Bitcoin and Ethereum always very tightly coupled. Right now, though. Sorry, you were going to say something?
No. When people say, "What are you doing?" I say, "Well, just buy it all." I have gold, silver, Bitcoin, Ethereum. Like I said, I'm just betting against my government. That's all I'm doing. The stupidity of them.
So if you want to bet against the government, it's Bitcoin. If you want to invest in the technology, it is Ethereum. But there are a lot of projects within Ethereum that I think are very, very promising as well.
So Ethereum has some use to it. That's what you're saying.
Yes. There was a lot of ideas, a lot of technology, scaling. All those ideas came out in 2018 and 2019. The first thing that really got adopted was in 2020. and that was called the Decentralized Exchange. But a couple projects made use of a concept called automated market making. And basically what that means is you can deposit money in pools, and then people can trade out of those pools. So at any moment in time, I can just go on, use my wallet that has any number of tokens and swap it with other tokens. And there's always liquidity. And that concept in 2020 exploded. It got to the point where there's more volume on decentralized exchanges than centralized exchanges. So that was 2020 was like the year of DeFi, decentralized exchanges. 2021 is going to have a whole new a whole new set of services that we can talk about as well.
Jeez, no, you already lost me a long time ago. So anyway, so
like today you have to log in, right? You have to log into your E-Trade, Ameritrade to trade a stock, right?
Right.
That whole concept is going away now. With blockchain, you can represent stocks on blockchain and trade it without and you always have liquidity.
So are you saying, so E-Trade and those guys are toast?
It's trending that way. Centralized exchange volume is starting to rival the decentralized exchange volume in the crypto space for now.
Wow. So so going old school now, what happens to stocks then?
I think stocks will always exist because they have like fundamentals behind it. They have like actual equity and ownership behind it. What's happening in 2021 is a concept called synthetics. So real life assets are being represented on tokens, whether that's gold, whether that's the US dollar, or whether it's even like Apple or Tesla stock. That's all being represented on blockchain through different means of, and I don't want to get too complicated,
right.
But different means of like price feeds and staking and collateralization. So basically you can take all these assets, you make them secure, and then you make them tradable on decentralized exchanges. Right. And that means anybody with a wallet can trade these assets. And they can trade at any time. They don't have to log in anything. As long as they have the wallet, they can trade. And that's what's happening.
Yeah, it sounds like to me that's what brought down the real estate market was a thing called derivatives. So they would take a mortgage and then they would chop it up and sell it to other people.
Yes.
And so they're now taking crypto and then making derivatives out of it, or they could do it with anything.
They can, yes.
You could put real estate in it, gold in it.
And again, this is again so crazy in 2021 because there is a derivatives market forming as well. You can do options trading. You can do forex exchanges getting launched soon with INJ. Yeah, so there's a lot of different projects that are popping up, and these projects, by the way, are where all the yield is. So a lot of the synthetic projects are up about 500% just in the last 3 months alone, because people are already invested in Bitcoin and Ethereum. They need other places to now put that money, right? And then one of those areas is the synthetics that we're talking about right now.
So what holds it all together then is blockchain.
Yep.
Because blockchain is the contract. Well, that's why I understand it.
Blockchain makes it not just secure, but like transparent. And then you can audit the code. You can see like everything is reasonable and not like suspicious because it's on blockchain.
Yeah, so the way I understand blockchain, which doesn't work in the old world of real estate, gold, silver, and all that, was you never knew what those guys were doing with it. You know, there was no transparency in the Fed or Wall Street. And so what blockchain does is it's a decentralized system, right? And everybody's a part of it. It's not like the Fed is in charge of it.
Exactly.
Is that kind of it?
And before, people just weren't using it, right? You could say it's decentralized, but it's slower, and it's hard to. I have to like put up some new infrastructure to get it working. That was a problem in 2017 to 2019.
Yeah, but that will be solved because you guys will speed it up fast as you can.
Yeah, so the speeding issue is being solved right now, and I think the barriers of entry are being eliminated as well too.
Yeah, because you guys don't have government regulation.
Well, I would say it's more like the software has made it much more intuitive to use.
No,
much
I know,
more intuitive to start things up.
If I was to go and try and change the system of Wall Street, let's say, there'd be a lot of guys who would be upset.
Yeah.
Because they're making too much money the way it is. Why are you going to come in here? And so you'd have to go to Congress and the Senate and make all these changes. You guys are making these changes on the fly, just because I think you guys trust blockchain. You don't trust human beings.
Actually, I never thought of that. I think it's almost impossible to pick winners that will be the same winners in 3 years from now, because blockchain moves so fast.
Yeah.
Yeah.
And that's only the speed of your thoughts right now.
Yeah. If someone deploys a contract that looks great and everybody jumps over and uses that instead, you might have there's no one safe really in blockchain. Like, you might have a project that looks great today, and then another one comes out that's better. Then everybody starts using that one instead. It's kind of like the App Store, right? Like the Apple App Store or Android App Store, and everybody can just deploy the apps whenever they want. But right now is actually financial value tied to these apps, and it's crazy because they're all representative of real life financial services, and they're all being represented on the blockchain.
Kind of reminds me of the old days, when I was in the disco running around time. There'd be this one disco open up or this nightclub, and everybody be there. Then about 2 months later, some other guy had opened another one. Everybody was over there. Another guy went broke. That's kind of what it reminds me of right now. And that's why it's important people listen to this Rich Dad radio program, so you can have a concept of how fast this is moving. So we'll be right back, Jeff. Thank you. Welcome back. Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. You can listen to the Rich Dad Radio program anytime, anywhere on iTunes, Android, and YouTube. And please leave us a review when you listen. And all of our podcasts are archived at richdadradio.com. We archive them for one reason. We're purely an educational company. We have nothing to sell. So we archive it so you can listen to this again, because if you listen to this one more time, you'll pick up twice as much, because repetition is how we really learn. And then if you have friends, family, or business partners who need to hear this show, get together, listen to it, and discuss it. So if you all listen to it and you discuss it, your intelligence or your understanding will quantify. Because what we're talking about today with Bitcoin and Ethereum and cyber, it's invisible. And, the brain is designed to see the physical. The mind is designed to see the invisible. And so for people who are brain-oriented, they're screwed right now. And you have to go into your mind to see the relationship between, let's say, gold and Bitcoin, or Bitcoin and Ethereum, because it's in your mind, it's not in your brain. And that's the tough part right now for many old guys like me. So I'm just grateful I have a lot of gold, silver, Bitcoin, and Ethereum, and I don't get into the argument. Like Peter Schiff he's arguing about gold and silver, and Max Kaiser's arguing back. And I go, why the heck you guys arguing? Just get as much as you can right now, because the government's screwed. We're screwed. Our whole economy is screwed. We're so deeply in debt, we can't even, it's sinking into like quicksand right now. And you're arguing about which one should I have, gold or silver or Bitcoin. Just buy something. So Jeff, what do you have to say about that? Give a message to all the old guys like me out there.
I think definitely it's good to be diversified. I think Bitcoin and Ethereum, if you hold those two, you're like kind of holding like the index of crypto, the health of crypto, I would summarize it as. Because if Ethereum goes down, I would expect all the other crypto assets go down, and vice versa. If Ethereum goes up, I'd expect these other crypto assets that we talk about to shoot up even more, right? It's just like kind of like a derivative of Ethereum. It swings wider.
Right.
Yeah.
So, a derivative is an interesting phenomenon, and it's, you've gone into the mind now. It does, you have this piece of real estate. The mortgage is the derivative. And then when they put MBS as mortgage-backed securities, that was a derivative on a derivative. And that's why when it collapsed in 2008, it collapsed. So that's why I'm listening carefully. I think right now I'll stay with Bitcoin, Ethereum, gold, silver, and hang tight in there. But for the young guys who you guys grew up in the area of technology, I didn't. So your minds are different. Your minds are developed. You can see the invisible, where I'm still in the brain phase where I can only see what I can see, touch, and feel. So anyway, what is this thing called DeFi?
So DeFi is short for decentralized finance. Basically, it's mimicking real life financial services on blockchain. And with Bitcoin, the main mimic of financial service there is just currency, right? It's a currency and it can be traded. Now with 2020, basically the decentralized finance focused on borrowing and lending first. So people could deposit money for interest rates and borrow for and paying an interest rate on top. And also we talked about the automated market makers, which was the liquidity. So people can trade stuff as well. Now, what we're seeing in 2021 are these new developments of other financial services. So you're starting to see like options trading, you're seeing insurance, you're seeing hedging, you even see hedge funds, like you're in finance. That ecosystem is really covering a lot of the different ideas in finance. And basically all these things are being developed and represented on chain. So these are all financial services, decentralized on blockchain that you can use if you have a wallet. That's it.
So excuse me for being an old guy, but it sounds to me you guys are mimicking the existing system.
Yes. That is, I think most of the influence and the ideas come from existing services. But I've seen some creative things, like if you purchase Ethereum, for example, it might automatically execute a put option for you all on chain, right? So that's just one idea that's very interesting, but it's not really common in practice in the real world.
Well, so anyway, that's...
But and again, I think right now things are very, very hard for people that don't know about all the new stuff that's coming in crypto. Over time, it will eventually become the barriers of entry again will always get easier. So like right now, you see PayPal, you can buy Bitcoin and Ethereum off PayPal. You will eventually see PayPal offer these same financial services that connect to these chains, or they might offer these tokens that are representative of these projects on these other exchanges.
So PayPal could become a JP Morgan offering all these financial services, and
I think it's more like Goldman Sachs, by the way, is part of just announced that they needed to get into this space. So it's more like financial services are trying to get more into blockchain rather than blockchain trying to break into finance.
Right. No, I understand that. I mean, they have to come your direction. Just like, like JP Morgan, I think they paid $95 billion fine for manipulating the gold market when those criminals get into blockchain. And, hopefully, all I understand about blockchain, it's more secure and more transparent and less manipulable than what JP Morgan and Goldman Sachs were doing. Is that your understanding too?
Yeah, I think if we take a step back, blockchain again is just nobody owns the infrastructure. There's no central bank, there's no country. A bunch of different servers are out there running at the same time, and they all own the same code, the same chain, the same history. So it's almost impossible to come in and then break the system or develop a new code that like catastrophically ruins the whole ecosystem. So what that means is you can build new apps on it, you can build new services, and there are malicious services on there for sure. But overall, things that work, the things that are verified, become adopted. And you have this like kind of world computer where everybody can go in and create their own app that everyone could use. And again, it moves fast because something works or something works better. Everyone migrates to that. Everyone uses that service instead.
So let me give you my logic system because, I'm a really old guy and I looked at this whole thing and I just didn't trust my government. That was it. I didn't trust Wall Street. I took 3 companies public, and every time I did that, I got nauseous. Do you know what I mean? I just got sick at how they manipulated, lied, cheat, steal. Mm-hmm. And so that's why I stayed out of the stock market. I mean, it cost me a lot because I refused to jump into the den of thieves or where I didn't know who was screwing who out there. And I stayed in real estate, and I stayed as an entrepreneur, things that I could control and I had management over. But it sounds like to me, and correct me if I'm wrong, that what blockchain did to it is it brought trust, a little bit more trust and transparency and less not criminal, but you guys would jump over anybody in there who was screwing with the system, right?
Yeah, and I think the key takeaway is that transparency. Everyone could read each other's code. Everyone could help develop and vote on different governance decisions. And then even things that other people build can work in conjunction with other people's ecosystems. And I call it ecosystem because, it maybe is just a piece of code. But if it's a piece of code that interacts with a lot of other applications, and then those have like not just financial, but also economic experimental situations that happen from that, then you start forming these ecosystems around blockchain that have like billions of dollars getting poured into it and out of it. So again, the key word is transparency and trust. But like I said, there are malicious intent actors in the blockchain space as well.
There always will be.
Yeah.
It's like I listen to these socialists who say, why can't we all live together happily? And I said, why don't you just don't lock your doors to see how happy you are? There's always somebody who's going to come and screw you.
Yeah.
So they're in this fantasy world. But I just understood blockchain as a little bit more of a contractual system that you guys control the contract.
Right. Exactly. And right now, and this is again another topic, there is another project called Polkadot right now, which is very, very similar to where Ethereum was in 2017, 2018. Polkadot has that ecosystem now. I think what is very important to understand is anybody can launch a coin, anybody can launch a blockchain project, but what really matters that we're seeing right now is that ecosystem. Do you have a service that can fulfill like on-chain transactions, that can bring wallets, that can read what's on the chain, but do you also have other services for like testing and for bringing apps online and all that stuff? So what I'm seeing now is like Polkadot is actually starting to show that ecosystem exists, and it's really catching steam right now. A lot of the smaller startup projects in there are like starting to multiply. They were worth like $1 million. Now they're like $10 million, $20 million now within the span of the last few months only. So right now it does seem like Ethereum and Bitcoin, they're only up 100% in the last like 2 months, right? Like only up 100% is really crazy to think about. Whereas all these other projects are coming in and they're going up like 10x. And that's because like, okay, now we're like at the stock market, nowhere to go. Let's go to Bitcoin and Ethereum. Now we're in Bitcoin and Ethereum, nowhere to go. Let's go to what other potential stuff is happening. But like I said, as we discussed this whole hour, there is a ton of stuff happening in crypto. And most people don't know about it, which is crazy.
Yeah, because we have a brain and we have a mind, and the brain can see what the eye can see, touch, and feel. And the mind can only see what's invisible. And so you guys are operating in the invisible. And that makes it hard for somebody who's been playing with gold and silver and real estate. The mind is not geared for the invisible as much. This is the other question. When you say ecosystem, what does that mean to you?
I would say it's a set of services and developers that all support each other. But if there is a barrier to entry, that barrier of entry is solved somehow. So somebody has come up with a way to make it easy to do something that is necessary for that platform to run. I know it's very generic what I just said, but basically it's a set of services that work together that really make things, that make all the barrier of entry go away.
Okay, a couple more questions. So I'll hold Polkadot for a while. Way back when, in the 2000s, that was 21 years ago, they had the .com area blew up, and I think the only ones that survived were like, I guess, Facebook and Amazon, and there was pets.com, and everybody was starting a .com company back in 1999, 2000 and all this, and it all collapsed down, and only the real survived, should we say, which was Amazon and those guys. Is the same thing going to happen with crypto money?
Absolutely. I think things are overheated right now, and I think this is all a result of lots of stimulus being pumped in, lots of the stock market being up. Right now, there's no signal that it's going down anytime soon. With the third stimulus coming, there's no reason for it to go down unless the dollar gets stronger. Is where I see like the red flags will be when the dollar gets stronger, or if the government steps in and they say like, hey, you're not allowed to use this wallet unless you identify who owns it, which is what FinCEN actually proposed last month.
Who did?
FinCEN.
Who's that?
It's just another government authority that regulates financial services. That's
a U.S. government?
It's U.S. government, yeah.
Are they specializing in crypto, or are they old school?
I think any financial services they will make policy over. And I think what's also important is the Office of the Comptroller. It's another regulatory body in the government. They actually approved on-chain transactions for stablecoins, though. So you do have like kind of red flag regulatory service or regulatory actions, but you also have ones that kind of accept crypto. So like that was a huge call, saying that stable coins, which just means $1, by the way. Stable coin is $1 on Ethereum, let's say. That can be accepted as a settlement. So like there are regulatory actions that are making blockchain more standard. But again, like as you said, like will there be some event that causes everything to crash down again or correct again? And the two things that I would say are government actions, regulatory actions, or strengthening of the dollar. And those are the two things I would look out for if I was watching for price action changes.
Okay, and not too long ago, I think what crypto was getting up, what Bitcoin was getting up to my $50 line, and dropped I think $15,000 or something. What caused that?
By the way, 30% swings in crypto are entirely normal. Just want to make sure that everybody is aware of that. The volatility.
Well, you got to be young, otherwise you have a cardiac on that one, man.
Yeah, and in our newsletter, we actually have strategies to counteract that, whether it's stop losses or taking profits at opportune times. Right. But I think the main takeaway is that crypto is a very, very, very volatile asset. We have had days where in DeFi, in the fall of last year, it dropped 70% in 2 days. Because it was just like the inflation was getting out of hand, and people kind of learn from that mistake as well. So just to like make sure that precaution is out there. If you get into crypto, you do have to understand it is a wild ride, and there's huge swings in both directions. So Polkadot, we talked about it earlier, but it is a new standalone blockchain. So like Ethereum has its own network, has its own like DeFi services and all that. Polkadot is another standalone chain. Its intent is to connect different chains together. So instead of a single ledger, a single history, a single block of code that everybody can write to, it's actually more like a hub of different chains that connect to each other.
So how would a guy like me even hear about Polkadot, and why? I mean, you probably say just stay out, right? You're too old for this stuff.
No, I mean, like if you want to invest in startups, or you want to invest in ideas, or things that could potentially become like standard, right? The standard of real life services, you want to know about these things, right? You want to know about these developments of new projects and new like startups that you can invest in that can explode, I guess is a summary. But Polkadot again is showing the signs that Ethereum was showing about 3 years ago, where it's new. It's got a lot of ecosystem, a lot of apps supporting it, a lot of good developers, and a lot of potential. That's why I wanted to at least bring that one up out of all of the other projects that are going on.
So how does a person stay abreast of, like, do you run a service for this, or is there a way of, in the old days, there was newsletter services because I was starting gold mines and silver mines.
Oh, you know I do. So I run a newsletter called Rocket Fuel Crypto. And it is like a monthly newsletter, but also has weekly videos and weekly newsletters as well. And we try to keep everyone up to date as to what's going on in the space.
So how do they get in touch with Rocket Fuel?
Yeah, so the website is rocketfuelcrypto.com. And if you want to get involved, it is a wild ride and a lot to invest, a lot to stomach. But again, this is what's happening already. Like the stock market is kind of stagnant. It's kind of at a very peculiar place, and then even Bitcoin and Ethereum are kind of in a peculiar place as well. And I think this newsletter has kind of opened your eyes to kind of the other possibilities in crypto and a lot of the other events happening in the space.
Is there a charge for your newsletter?
Right now it's $47 a month. We actually think that is a lot of value for it, so we're kind of rethinking about the model there. But for now, it's $47 a month.
You think about raising your price?
It's not up to me. There is a team that thinks about the economic consequences of doing that, but yeah, that is happening.
Okay, so when guys like the Winklevoss twins and Max Kaiser say Bitcoin's going to go 400, 100, 300,000, what goes through your brain?
I think it's such a complicated question to say that it's going to go to 100 or 300,000 is too simplifying it. Like you have to say, if the dollar keeps devaluing, right, then it has potential to go that way. If there's policies that come out that support blockchain and blockchain adoption and support, that could push those currencies up to 300K. That would be how I'd answer it. But
so in the
current state, if again all those things I just said have to happen, right? Adoption, regulatory certainty, You need like a lot of things to happen for those things to go up that high. But at the current state, I don't think it's very likely for it to go to 100K.
So that's like saying, well, Santa Claus might be coming.
Yeah, I think they do, obviously they hold a lot of Bitcoin and they want it to go up. So they're going to say that. But they do have a point. If there is uncertainty in the dollar, then Bitcoin's kind of range of outcomes is very wide. That is how I would describe it.
Can somebody knock Bitcoin out of the top position?
I think Bitcoin will always be near the top position. Ethereum will probably outpace it. We already saw that this year, 700% gains in Ethereum versus 300% in Bitcoin. But I do think Bitcoin will always have because it was the first mover, and because right now financial institutions hold so much, they're going to want to make sure that it remains the gold standard of crypto. And I think Ethereum will be the gold standard of the technology. So the applications, utility, that's where Ethereum will kind of have to prove itself if it's going to beat Bitcoin.
Would you say that it's Bitcoin is like gold and Ethereum is like silver?
I would not. I would actually say Bitcoin is like gold and Ethereum is like the S&P 500.
Oh, is that right?
Yeah.
Why not silver?
I think silver, there is very, very tight correlation as well. But if you were to say silver, if you were to pick one asset in the crypto space, that'd be Litecoin, which is a fork of Bitcoin. And that acts more like silver to Bitcoin. So
there's a thing called Litecoin, Ethereum, Bitcoin.
There's so many, there's thousands. I'd want to get into all of them. Litecoin is just a fork of Bitcoin. It has some better transaction speeds, and it's actually more of a sandbox for Bitcoin, but we don't have to get into Litecoin. So I just want to say Ethereum represents many, many services that are being developed, which I think represents the S&P 500, which is a lot of companies represent the economy, right? So that's why I say Ethereum is like the S&P 500.
So Jeff, I think you can just raise your price now on rocketfieldcrypto.com because this field is exploding right now, and if you don't know what's going, you can get sideswiped. But anyway, thank you always for your you're doing your best to simplify it for everybody like me to understand it. But it's changing so fast right now, and when I look at what's coming up from the real estate side, how many of these projects are going to collapse. And then we have our pensions are going to collapse. I mean, I don't see, that's why I'm into Bitcoin and Ethereum, and I'm into gold and silver. I just don't trust the dollar. It comes down to that. So anyway, Thank you very much, Jeff, and I appreciate it.
Yeah, thank you.
When we come back, we have a final discussion as to ¿Qué pasa? What's happening? We'll be right back. Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. I want to thank Jeff Wang and rocketfieldcrypto.com. Please stay in touch with him. There's too much going on to not be in touch with that young man. Anyway, listen to the Rich Dad Radio program anytime, anywhere on iTunes, Android, or YouTube. And please give us a review anytime you wish. And all of our podcasts are archived on richdadradio.com. We archive it because we don't sell anything. We just basically want you to learn something, and repetition is how you learn. So if you listen to this, go to richdadradio.com, listen to this program again, you'll learn twice as much. But if you sit down and discuss it with friends, family, and business associates, your understanding will quantum. And that's why we have the Rich Dad Radio Show. I mean, my age, it was way over my head, but it's not an excuse not to do my best to understand it. So with that, in a final, I'll ask Sarah, our producer here, what did you think, Sarah?
Where do I start? We've talked recently with Simon Dixon, who's a Bitcoin guy, Raoul Pal, who, I think he's a little bit of everything, but he really made a case for Bitcoin. And so to have Jeff Wang on, he really brought in the importance of the technology aspect of it and how that the decentralized finance perspective. So it is a big topic. I mean, you remember when we talked about what's it called? The underground piping, the shadow banking system. Okay, that's what I think of crypto. I think it's a big topic. But so I'm glad we're doing this show. I'm glad that we're continuing to talk about it because I think it could, digital currency could be the future.
Yeah. I think it is. I mean, the reason I was talking about we have a brain and we have a mind. The brain is the physical, what I mean, to see, touch, and feel. But the mind gets the relationship, the invisible. So one is physical, one is metaphysical. And not the challenge or what's happened with Bitcoin or with crypto, it's gone invisible. So you can't see it. So that's why Jeff Wang's, newsletter is crucial, because you have to educate your brain so your mind can see what's going on, because you can't see it. It's not like gold or silver or real estate. You can see, touch, and feel. This world is so different now. It's like you don't need Wall Street anymore. You can have a crypto Wall Street in the sky called Polkadot, or whatever you want to call it. And these young guys are just inventing it. And if you don't see the new Wall Street building going up called Polkadot, you missed the boat.
Yeah.
I think that's the challenge right now, because it's invisible. What do you think?
Definitely, and that's where he was talking about the synthetics, the real life assets, though, that are traded on these exchanges.
Right.
And I think, in my mind, as he was talking about it, I was seeing the physical, I was seeing real estate, I was seeing gold, but then trying to translate it into being traded or on these exchanges, and that is difficult to do.
Well, you got to train your mind to see what your eyes cannot see. Now, let me say this again. When I get a piece of real estate, I'm getting a derivative called a mortgage, and then I sell the mortgage. So I've taken a derivative of a derivative and sold it. And that's what brought down the real estate market, because we're operating in these derivative worlds, and crypto just made it more derivative. So that's why, I think Jeff's fantastic, because he does his best to keep it simple for somebody like me to understand.
Yeah.
But if you're really going to be serious into this, I would subscribe to his newsletter. We don't make anything off it, but it's a way of staying abreast of the invisible. I think that's where you can build a whole new stock exchange in the sky and never see it.
That's true.
So, any final comments on that?
Final comment is like you said, just if you're going to take on a new, I don't want to say investment, but if you're interested in this, you do your research. Learn from real teachers, people that are actually doing it. Watch for scams. Because this is invisible, it makes it easy to scam. So just be careful who you're learning from. Be careful where you put your money. That would just be my advice to our listeners.
Right. And I'm concerned about is 2021 is going to be more violent than 2020. And I hope I'm wrong, but I think that's what's coming. So that makes the idea of just saving money and working hard is what technology is making people's obsolete. If you don't have a skill or something that people will pay for, then, you're going to have the Democrats take care of you with UBI or MMT. But this is the most screwy world, and it's going to be a transition. Jim Record says it's about a 50-year transition we're going through right now. So that's why with the Rich Dad Radio Show, stay abreast of it. Not you can stay abreast of all of it, but you've got to do your best to stay abreast of it. So I thank you all for listening to the Rich Dad Radio program. I'm completely lost. I think I'll go have a drink and forget my problems. Anyway, thank you very much. Bye-bye.